This is one of the most important aspects of trading that people always disregard. Whether you are already into trading for years or you are a beginner, it is very important to get the foundations right. And what we're about to talk about in this video is the foundation of trading. Just like building a house, right? You have to get the foundation right in order for you to have a solid house. And I'm going to show you the key important things you need to do and things you need to look for. 60 to 70% of traders in the world right now are technical analysts. If you're a technical analyst, you need to know how to read the chart. It's super important for you to know the basics and to know the foundation of trading in order for you to be successful in the forex world. So I'm going to take you to the chart now and I'm going to explain the basics, the things that you need. So without further ado, let's go straight to the chart. The number one thing is to determine the phase of the market. All right, is the market trending or is it ranging? This is very important. Every single time you approach the market, every single day in the morning or anytime you're approaching the market, you need to be able to understand this. Whether you're a day trader, scalper, or a swing trader, it doesn't matter. All these things matters for every single trader. It doesn't matter what strategy you use. All right, this is very important for you to know the phase of the market. All right, if the market is trending or the market is ranging. When the market is ranging, where the price is moving, all right, in situations like this, it's going up and going down, going up and going down. Now it doesn't have to be perfect like this, all right, but this is the type of scenario that you want to see. Right here, what we can see is that we are having a rangy phase. Okay, you can see price move all the way to this point here, comes back down here, bounce, push back up again, bounce back, push back up again, bounce back, and everything. This is the type of phase that we call a rangy phase. Okay, and this is the phase where we call it the trending phase. All right, you can see price moved out of that and continue to fly to the upper side. Now it can also move all the way to the downside and continue to push to the downside. So in the diagram, you're going to have something like this. All right, something like this. Then price is going to either break to the downside or break to the upper side, and after that what you're going to see is situations like this. So right here, which is the ranging phase, then at this point again we have the ranging phase again. These are the type of phase that you're going to experience, you're going to be seeing in the chart. So it's very important for you to always note this before you start trading or start doing anything in the market. This is something very important that you need to pay attention to before you start trading. For me, basically, I always look at these things and always try to understand where my buyers are, if the market is trending or the market is ranging, so I can know how to approach the market, all right, for what the market is doing. I can understand that the next thing you need to do is to understand which direction the market is going to. One of the best prop firm in the industry right now is Blue Guardian. It is very important for you to choose carefully which prop firm you want to go for, all right, because there are so many prop firm out there right now. Some of them are scam, some of them are real, but I'm bringing to you guys one of the best prop firm in the industry right now. All right, not only the fact that this prop firm has tight spread and low commissions and also a payout proof, they also give you the opportunity to protect your account if you're over emotional every single time you're trading. They also have one of the cheapest price in the industry, and if you use the link in the show box below to sign up, you're also going to be getting 20% discount. All right, based on this diagram right here, we can see when you're on the ranging phase, there's usually no direction. All right, price is just going to be moving up, down, up, down, up, down, up, down. All right, so no direction. So you can only find a direction in the trending phase. All right, so if you're looking at this right here, what this tells us is that price is on the downtrend, and right here we have the ranging phase again. Now, how do you know a downtrend and an uptrend? All right, there are a couple of rules. There are so many ways people use to determine their direction, but the major one is for higher highs. All right, I'm going to use higher highs, HH. We have higher lows. Okay, we have lower highs. Okay, and we have lower lows. Now, what is higher high? You have price pushing up at this point here, breaking above this guy right here. Okay, whenever you see price break above this a fellow high, okay, this is a fellow high right here. You see price breaking above the fellow high, okay, and pushing back to the downside and then pushing up. All right, we can say at this point here we already have all right, two higher highs. Okay, now let me show you guys what we have right there. This one high that got broken by this high right here. Another one we can see again is this high. All right, this is the high we have here. This high was also broken by this high. Now when you have things like this, all right, when you have situations like this, it means that the market is on an uptrend. Okay, we are on an uptrend. Okay, because the price continues to print higher highs. Okay, higher highs. All right, price continues to print higher highs, and continue to just push to the upper side. This is an uptrend. Okay, now this point is called higher lows, which means that this low, all right, is higher compared to this one. Okay, this low does not take out or close below this low right here. So we call this one higher low. This also higher low. This also higher low, and this also higher low. All right, the low is bigger. The low is higher than the previous low. All right, you can see this is where we have the previous low. The next low was this one, the next low was this one, and the next low was this one. So when you see price print higher highs and what higher lows, higher highs, higher lows, all right, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, it means the market is on an uptrend. Okay, uptrend, that's what we have. So in situations like this, you should only be looking for buys. All right, you should only be looking for buys because the market is going up. Now you can see right here we have higher highs, higher lows, right? Then we have that rangy phase before the market, all right, move to the downside again, all right. And at this point here, what you can see price made a low that is breaking below the previous low, all right. It can be this one, it can be this one, but you can see this low is breaking below all this low right here, all right. We call this one lower low, all right, because this is the low and this is even a lower low, all right. So we call this one lower low, all right. What's this one called now? We call this one lower high because this is the high and this is the previous high, and this high is lower compared to this high. Okay, so we call this one lower high, this one lower low, this one lower high, lower low, lower high, all right, lower low. When you see situations like this, what do you call it? You call this one a downtrend. All right, this is a downtrend. All right, so that's a simple way for you to be able to know which direction the market is going every day. All right, so you don't want to trade against. We've been able to talk about the direction of the market now, so we've been able to understand what direction the market is going to by just putting some things into consideration. You have to understand the direction and also understand if the market is trending or ranging. All right, you are almost done with the basic thing you need to do. All right, your technical analysis, you are almost done with that. Okay, now the next point I want to talk about is understanding key levels in the market. All right, now this is a very big topic, all right, which I'm also still going to make a dedicated video for just this alone. All right, where I'm going to be explaining everything that has to do with key levels and everything. If you guys know, I do live session every single day, all right, on YouTube, all right, and it's absolutely free. So if you want to join us, you can join us for free. I majorly trade key levels in the market, all right, which I also mark key levels and send to the Telegram channel. So if you want to join the Telegram channel, you can use the link in the show box below. So now, how do you understand key levels? Where are key levels in the market that you want to trade? Key levels are the levels where price react to every single time. I'm talking about past now, all right, past and present. What has happened today or in the past to determine what's going to happen in the future. Okay, now if you have a level where price has reacted to several times, or probably you've seen price move at a certain direction, then that zone is a key level. Now let me give you an instance. All right, you can see price push all the way from here, got to this point here, have a little reaction, then push back to this downside here. Now when price got to this point here, we have a major pullback, all right, at this point here, and when price got to this point again, price push back down again. Now you want to ask yourself, why does the price get to this point here and push back up? And why does price get here and knows that, oh, this is the point where I want to get to and push to the downside? If we mark this one like this now, it's okay, we mark this point here and we want to see why does the price react to this point right here. You can extend this one back and you're going to get some information of why price reacted to that point. Price has been reacting to that point in the past. You can see right here we have a reaction. Price made a bearish candle, right? Then after making this bearish candle, you can see price push back up very strongly again. All right, now you can see we have multiple rejection at this point right here on that same key level. Price also reacts to this point here. All right, you can see price also react at this point here. All right, what that is telling you is that price reacting at this point here and pushing to the downside, it's only reacting to what has happened in the past. Okay, so that's how we basically use the past to predict what's going to happen in the future. Now let's say you're hanging at this point here and you're waiting for price to come back to this point here to have a retracement. All right, you would have an entry, all right, at this point here, and your stop loss somewhere around here, and your TP anywhere you want to put it to the downside. Okay, so that's how we use the past to predict what's going to happen in the future. Right there, this has become a key level. All right, now if you're looking at this point here, where's another key level? Again, we had price react at this point here. If you want to predict what's going to happen in the future this time, not going back, all right, we have price react at this point here. Now we can box that point, all right, and say, look at this point here, we have price close below it. We have a push back up again. Then we started seeing a rejection at this point here. You can see price also pushed to the downside after touching that same key and this key level right here and continue down. Now you can also box this point here, box it down, all right, because price has reacted to this point here. Price has pushed back up. You saw price break below it, all right, and after that you can see price come back to this key level again. After getting there again, price continue to the downside again. All right, so there's always a reason why price is rejecting at every single level, and if you can trace that back to the past, you can always see the reason why that is happening. So you can use that to predict what's going to happen in the future. Okay, now looking at this one right here, this is a key level. We've seen price react to this point here. We've also seen price get to that same key level right here and react at this point here. Okay, now if you box that point right there, you can see that. All right, let's push that up a little bit just to be on top of this guy right here. Let's push it up a little bit. Now after pushing it up, you can see that price get to that same key level again and react and push back to the upper side. So that is how to know key levels in the market. It's just a very simple thing. Look to the past and see where price has reacted before. All right, after understanding where price has reacted before, just patiently wait at that point. All right, then wait for the confirmation and you get into trades. Now you can trade this plainly. You can just decide to just trade this, all right, just blindly. That's the reason why there's always a strategy, all right, an entry strategy, couple of confluence, couple of things you want to look into before getting into the trade. All right, another thing you can do if you want to know the market direction, this is just like a bonus tip. All you have to do is click on indicators. When you get to indicators, all right, then search for MA, all right, which is moving average. Put moving average on your chart, then come to the settings, all right, and increase the length from here to 200. Okay, haven't done that. Okay, so you can know the direction, all right, by just looking at the moving average. Okay, if the price above the moving average, you want to be looking for buys. Right here you can see immediately price was above the moving average. It started printing higher highs, higher lows, higher highs, and at this point here immediately price was below, all right, the moving average started printing lower low, lower high, lower low, lower high, lower low, lower high. So that's just the trick. In the future I'm going to make videos about how you can get into trades, what are the confluence, what are the things you need to look for that can easily help you to get into trades. How do you know a strong key levels in the market? So that's the simple way to read the charts. Every single time you're approaching the market, always incorporate this into your trading and look for these things. Whether you are a swing trader or you're a day trader or a scalper, it doesn't matter, all right, what you do, all right, as long as you put all these things together, because these things also matters in whatever trader you are. Now if you enjoyed this video, please give it a thumbs up, and if you haven't joined the family yet, please subscribe to the channel, join the family. If you want to trade, if you want to join traders, group of traders who scalp and day trade, we trade every day, almost every day, and we go live, and it's absolutely free. You don't have to pay for it. All you have to do is join the Telegram channel. The link is in the description box below, and you can also subscribe and turn on bell notifications so that every single time you are live, you can join us and we trade together live. All right, don't forget guys, it's absolutely free. So thank you for watching this video. God bless you, stay profitable, and I will see you guys in my next video.